Hi everybody, it's Christian from Serene Education with the 4 majors analysis update for the 9th to the 14th of August 2015. Going to be looking at the 4 majors. I'm going to start with the Euro against US dollar, and on each one of them I'm going to start on the weekly just to have a look and see how the prior week has gone to give us an emphasis on what we should be looking for the following week going ahead. So let's start with the Euro against US dollar on the weekly time frame. So here again, straight away, you can see I'm using the FX8 template. This is one that's taught to all our students. And you can see straight away that I'm looking at the hard left-hand corner here to give me a bias of long-term trend. And you can see straight away that my monthly, my weekly, and my daily are predominantly red. And the R-squared on my monthly and weekly are confirming negativity is still generally to the downside. However, saying that, you'll notice that the intraday time frames, 4 hour, 1 hour, etc., is looking predominantly blue. So it tells me that I'm in a long-term negative trend. However, I'm consolidative at the moment. So in consolidation because the long-term trend is negative. Okay, so it's all red. However, a lot of blue intraday. And it's predominantly because we're in a consolidation. And if I look at price action right now on the weekly time frame, you can see that the overall bias has been to the downside. Having said that, we haven't seen any further lows recently. And if you look at the last 2 weeks, in fact, a lot of indecision. Okay, spinning tops, dojis if you want to call them, more of a doji, which in candlestick formation means indecision, because clearly the open and the close are smack bang on each other, and you can see there's a lot of wick, which emphasizes that there's clearly a price. Both the buyers and sellers are clearly not in cahoots with each other. Not one of them is actually taking the higher ground. Therefore, we see an indecision. And what we don't want to do is we don't want to trade an indecision. Okay, so clearly a lot of indecision out there. Clearly, the market is not happy with what they're seeing at the moment. And therefore, there is no genuine buyers or sellers in the market. So we've seen a lot of movement. And that movement is predominantly occurring just generally because of the fundamentals that are coming out on each particular day. So if I look at overall bias, you can see that we've still been going sideways. We have been going sideways since April, in fact. We've not seen new highs. And having said that, we've not been able to break the February lows. So if you look at it, pretty much for for 2015, we've gone sideways. Okay, very much the sideways. And you can see that there has been 3 points or horizontal support and resistance levels that price has moved between. And clearly here at the hard right edge, you can see price has done not a hell of a lot over the start of August. So not really good. And what we want to do though is we obviously want to be trading strong trends. And you got to ask yourself straight away right now, are we in a strong trend? And clearly the answer is no, because you can see that over the last month or so, price has just gone sideways. In fact, if you take over the entire bias for 2015, in fact, just gone sideways overall, especially since April. In fact, not seeing new highs as I mentioned, and we saw a break lower than the price support and resistance level low that we saw through April and June. However, we didn't see a continuation to those lows, as we didn't see any new lows breaking below this low created over here. Let me just get my cursor. That low over there back on the 12th of the 7th of 2015. So clearly no new current support and resistance level lows that need to be broken. So looking forward, what we need to see, if we are still in a negative trend, which is clearly what the indicator box over here is telling me to do, then I need to see price making new swing lows. And if I look at it right now, I currently don't have a new low, and I haven't seen a new low for now almost a month. Okay, so taking this low over here, you can see that every week preceding that, we failed to see a new low. So looking for the following week ahead, we need to see price making a new low to see any opportunities to sell with long-term sentiment, which is negative. So break below this level over here, which is clearly, if we're looking at on the hard right edge, but the 108036 level, and then we can target those levels that we saw back in February, March of 2015 as our first particular target. And between those 2 points, you're looking in excess of 300 pips, but we have to wait for a viable close lower for us to then get a genuine opportunity to trade. Failure to do so could see further consolidation, which is what we've seen over the last month or so, which will mean that if you are looking to trade intraday or trade dailies, etc., you're trading a consolidated range, and the downside to trading a range is the risk. Risk goes up tenfold. You're not really getting any genuine movement, therefore you're trading a very volatile consolidated range, and the risk goes up because of that. So here, if you're looking at euro, US dollar, got to see this level over here being breached, as I mentioned to you. So look for a close lower than that 1080 level at least. On any days this week, a nice bearish engulfing breakout. Look at the fundamentals to see if there's anything out there that's genuinely going to push price low for us to then to enter, and then we could look to target these levels down here in February. Ideally, we'd like to see a weekly candle close lower to give us more emphasis of that bearish continuation. A daily, yeah, it's good, it's a good start, but then we need to see those days stacking up after that breakout, finding resistance at clearly a support over the last month, to then see a continuation down to this level. So there again, depending on how aggressive you are in your trading, you could either wait for a daily close and then trade the outcome, or if you want to be more passive, give the following week away to give us a genuine confirmation of that, and then we can trade the outcome going accordingly. Going to move on to sterling now. Here again, you can see very similar. We saw a lot of selling through the latter part of 2014, and then we saw sterling going through 2015, in fact, actually pushing to the upside. And that's predominantly because we've seen some really favorable figures coming out of the UK market. Strong figures in terms of employment, very little unemployment, average earnings figures have been going up, which is fantastic, which is a good sign. And there's been talk that Carney might actually bring those interest rate hikes a lot closer than expected. So we could see a hike towards the end of this year, in fact the start of 2016. So that is a good sign for the UK market. Having said that though, when we start looking at the weekly candles, we haven't seen very little movement over the last month or so. In fact, 5 weeks now, we've seen very little movement. And you can see these candlesticks, a lot of indecision out there. Very small ranges. Okay, you can see the ranges very, very tiny. The body action in between those candles, very, very small. Not a good sign. Here again, a lot of indecision out there. If you're not seeing a lot of bull candles or bear candles, very strong bears or bull movements in those weeks, that means for the last 5 days that make up a week, on every single one of those weeks, we've not seen a clear directional of somebody having the upper ground, whether it be the positive side or bearish side. And that doesn't bode well, because it tells you that both the buyers and sellers out there clearly don't have a valid reason to trade, whether it be fundamentally. At the moment now, they just don't see any opportunities to trade. So you can see a lot of people are sitting on the fence effectively, and price action, what it's done to price action is just seen it just go sideways. It's gone into a lull consolidation range, and it's just moved sideways. So if you look at over the last 5 weeks, in fact, just pretty much gone sideways. The downside to that, if you're looking to trade within that week or those weeks, is, as I mentioned to you on euro, you're not going to see a lot of genuine volume. That's a lot of speculative trading, pretty much just trading fundamentals, the economic data that's come out on a day-to-day basis, and people have just been picking into aggressive entries and aggressive targets and taking their profit when they can. Nothing there that's really going to genuine or guide price genuinely for the foreseeable future. So here again, as I pointed on euro against US dollar, the same trading aspect would have to be applied to sterling against US dollar on this particular time frame, is to look for a genuine break. You can look over here, for example, a lot more messed up. In fact, there's a lot of the overall bias is still negative, but you can see prices pulled back a lot more aggressively compared to the euro against US dollar. Sterling, there has to be the sterling. The UK has a lot more positive stuff fundamentally, economically, compared to its counterpart, the Eurozone. Things aren't been stacking up. Greece is still another issue, etc., etc., etc. Things in sterling are looking far better. However, having said that, for the last 5 weeks, we haven't seen any new highs. We saw price trading into the institution moving average here at 1586 and change, but price hasn't moved any higher than those levels that we saw posted in June of 2015. We haven't seen price trading above that level ever since. In fact, she's actually fallen lower. The candlesticks are still red, so the overall bias is still one of negativity. The 20-period moving averages is doing a fantastic support. It's doing a fantastic thing of actually supporting price at the moment now, but the overall emphasis is still one of negativity. So we need to see that institution being breached to see a long-term bias to the upside. Failure to do so would put further negativity on sterling as the months progress. And what we need either way at the moment now is a breakout. We need either continuation to the upside or continuation to the downside. Either way, we need to see a better confirmational candle from the market. And here again, it depends how aggressive you are in your trading. You want to wait for a nice daily break low. You can see there's been a lot of wicks to the downside. So here, ideally, give a week back to the market for those passive ones to give you a genuine long-term bias of where price is likely to go to, or aggressively look to see if there's any fundamentally or economically this week that's going to drive the market in either direction, and then trade aggressively. We do have a current high that we can trade to, back to the institution moving average above us. If I can just move that over, you can see clearly that could be a first objective if we get one this week, and you're looking in excess of 200 pips. The other side of that would be a break of the 20-period moving average, and then aggressively target the price swing high here, or this morning star formation level here, 152,599 and change. Get below that level, then those levels that we saw back in March of 2015 will become a genuine opportunity. And you can see clearly here, first of all, another 200, but below that level over here, in fact, we see a far better opportunity in excess of 650 odd pips. So here again, depending on how aggressive or how passive you are in your trading aspect, that will give you a vital. You can see a lot of wicks over here I mentioned. So anybody trading intraday, you can see there's been a lot of hesitation. Pretty much price actions been moving according to the fundamental or the economic data outputs, and they've just traded exactly that. They've just traded economic outcomes, and nothing at the moment now long term is really stacking up at the moment. A lot of people are sitting on the fence, which is worrisome. We need to see more direction. At the moment now in 2015, things have been really apprehensive is probably the word to use, and the longer we see apprehensive in the market, the more indecisive price action is going to be or plot itself on the chart. So here again, just trade very carefully, guys. Next up, US dollar Swiss franc. Here again, totally opposite. You look at the euro against US dollar, more negativity on the left hand side. So long-term trend is negative but bullish on the upside, so consolidation. We look at the US dollar Swiss franc, yeah, also positive. Okay, so long term it should do the total opposite of what the euros, and it currently is. Okay, and you can see over here US dollar strength is predominantly very much in action, and you can see everything at the moment now is pointing to the upside. Very strong close to last week. In fact, after two hesitant weeks before that, however, still saying that price was still making highs, which still put more emphasis to the upside for the US dollar, and vice versa. We saw that really pushing through last week. So as it stands at the moment now, we should be looking for those highs that we saw at the start of 2015. In fact, here at the 10118 level, above the 1 level for the foreseeable for the remainder of August, in fact. So look at the fundamentals here again this week to see if there's anything out there that's really going to push US dollar strength or Swiss franc weakness. We had non-farm payroll figures out this past week, and just looking at those figures, we actually had a negative non-farm payroll result, down almost 15,000 jobs. Having said that, the average hourly earnings figure, which is also vitally important, actually went up 0.2%, so from 0 to 0.2, which is a step in the right direction. As long as those average hourly earning figures get stronger, that means that there's obviously a lot of cash moving around, which means that employers are actually giving the employees more bang for buck in terms of bonuses, etc. And that's a good sign, because that means those companies are making money, and if companies are making money, that means that there's obviously stimulation in the market. The economic data, is fantastic, which is good. It's a good sign for the US dollar. Looking at the employment change figure, also good. We came from a negative 6.4 thousand to a positive 6.6 thousand. That's for Canada. Average hourly earning, the US unemployment rate remained unchanged, 5.3. They forecasted 5.3, and it came in at 5.3. And just looking at the graph, that unemployment rate has actually been dropping, which is a good sign. Okay, we want to see less people out of jobs, more people in jobs. So we want that unemployment rate to continue to drop, which means that there's obviously less people unemployed and more people employed, which is a good sign for the US dollar. So long may they continue. It hasn't dropped any further, but the most important thing, it hasn't risen, which is a good sign. So came out of 5.3, that's okay. It's far better than having it come out higher, which is not what we really want to see. So here, look at US dollar strength to continue. So look to those highs potentially at that 1.0118 level for the remainder of August. So take the high of this week, in fact, and then what we want to do is look to see if Monday, Tuesday, Wednesday of the new week coming ahead actually continues to build on that. And then we have a valid target level. We do have a valid target level above, which, as I mentioned to you, is a January high, which is just short of the 270 pip mark going forward. US dollar, Japanese yen. Looking at the weekly, here again, a lot of indecision. Straight away, you can see the US dollar strength is there. Okay, monthly, weekly, and daily all looking positive. However, intraday, a lot of red, and the R spread is complementing that. So hesitation. So positive trend, but consolidation in a positive trend. And if you look at it, we haven't seen any new highs since May of 2015. In fact, we've seen price moving higher, not making any new lows, which is a good sign. So the actual 20-period moving average here supporting price, which is a good sign, because we don't want price making new lows. You're going to have it. Price moves up, and then you're going to see profit taking. But as long as price continues to hold on to prior highs, like the 2014 high, you can see on the pullback of here in May of 2015, price pulled back, a lot of indecision candles, but we saw support and prices pulled high. But as we head into the 2015 highs of May, we've seen a lot of indecision. And particularly over the last a full month now, we've not seen a new high. Okay, so that's a worrying sign because we want to see new highs. This last week, we actually saw the US dollar trading slightly higher than those highs we saw 3 weeks back. But by the close on Friday, the sellers were back in demand. So clearly, ideally, last week we would want to see a close higher than the 3-week high. We failed to get that. So further hesitation or indecisiveness there. However, there seems to be more bulls in favor. So there's still a lot of indecision, but there still seems to be more bullish overall bias to the upside. So here we need to see a break high this week. US dollar strength yet again. Look to see if there's anything this week that fundamentally is going to push price to the upside. Look to any US dollar data to give us that. And then what we do is we look to trade to the upside. We've got a clear objective here. We've got clearly 125.77 is going to be our first target for 2015. In fact, that's as high as we've been to this year. In fact, so that would be a valid target. We've got some retail sales month-to-month figures coming out. Core retail sales month-to-month figures coming out. We've got PPR month-to-month figures coming out. We've got the consumer sentiment figures coming out on Friday. So there's a lot of data for the US market. So let's have a look and see how those stack up and see where it takes us. But vitally important, indecision the last month. Got to see if there's valid indecision out there. That means that the buyers and sellers are clearly not in cahoots with each other. That's not a good sign. So just be aware. You got to trade with a bit of hesitation there because of the uncertainty that's happened over the last month. But the overall bias is still one to the upside because we still have blue candles and we're not seeing any new lows. Okay, so not creating any new highs, but we're not seeing any new lows being made. So the overall bias is still to the upside. So here, just be patient, wait for that confirmation breakout, and then trade to the upside. A lot of people at the moment, as I mentioned to you when we looked at Euro, people are just trading economic data as it comes out at the moment. Very aggressive entries, very aggressive targets, and taking everything off when they get to those targets. Not leaving anything on the table. So at the moment, people are trading likewise because overall there's a lot of uncertainty on the market, and that's to do with the Chinese market. We saw a lot of negativity coming out of the Chinese market. We've also had Greece. Yeah, they've papered over the cuts, the holes in the wall, in the wall, but Greece is still an issue. So look at those and see how those things. But otherwise, that's it for this week, upcoming week. Please do your due diligence. Please look at the fundamental data, the economic data, see if anything out there is going to impact anything you're looking to trade. And then look at the US dollar, strong on paper, showing a lot of strength. So look to trade that against any of its crosses. Same against with sterling. Sterling on paper, very, very strong. It's the strongest economy out of the 7 industrial economies out there. So there again, look at trading sterling against any of the crosses, especially against any weak commodity crosses. Commodity pairs have really taken a battering recently. Interest rate cuts, and some of them at least twice this year already. CAD, New Zealand dollar, Australian dollar are a number to talk about. So look to trade strong currencies against weak currencies in that aspect. Okay, and then just back it up with very, very, very good money management. Vitally important. Got to have a sound money management rule. Can have the best temper in the world, but if you don't follow the right money management, it's worth nothing. Okay, so very important. Always look at your money management and complement that with a very, very strong tempered strategy. Okay, I'm going to leave you with that. I hope you have a fantastic week ahead and keep it simple, guys. And most importantly, you guys trade serenely.